This is gonna be one of my favorites because sometimes I get lost in this. Sometimes I get lost in this. What is the difference between accrual and cash basis? Accrual and cash basis. Um, Very simply, it's how you're looking at. Let me take it. Let me define it another way. Accrual and cash basis. It's when you're recognizing something happens. That's really what it is. It's the timing. That's one way to look at it. That's probably the main way to look at it. So let's say you are an ad agency and you build your client. It's almost the end of September, so let's say you build your client September 30th for $10,000. Here you go, Mr. Client. Here's the bill for $10,000. On an accrual basis, that $10,000 is part of September's revenue. If you look at September's P&L income statement, on the top line in revenue, you made that $10,000. But wait a second. You billed the client, but you didn't collect the money. How does that work? You didn't make any money yet. You just billed the client. That's the whole point of accrual basis. Accrual basis goes along with when things, it's not cash basis. That's something completely different. If you're gonna bill your client, say that, here you go, Mr. Client, work has been completed, service has been rendered. We are now gonna bill you. Here's a bill for $10,000. Please pay. Please remit at your earliest convenience. I love it when invoices say that. Cash basis, let's say the client pays his bill the very next day. What a nice client. October 1st, they pay $10,000 and it goes directly into your operating account or your revenue account, into your bank account, and it's there October 1st. Cash basis P&L, it would recognize the revenue on, I think you're getting the point, on October's P&L, not September's. Why is this important? Who gives a damn? Why is this so important? This is important because in a few ways, tax reporting issues, for tax reporting concerns, if you recognize, and this goes for both revenue and expenses, whether you recognize a certain revenue or a certain expense, whether that happened in prior year or current year, that's very important because that kind of, changes things. Another reason why is, and I have to, it's a learning curve thing, and you can see that I'm getting worked up here. I'm gonna hulk out. I have so many clients who are so damn smart, and yet they're so stupid when it comes to finances, and they're so childishly tied to cash basis when it comes to looking at their month-by-month P&L, especially if they're in, only if they're in professional services, because some of my professional service clients, maybe they do creative work, maybe they do consulting, maybe they do, maybe they practice law, maybe they practice medicine, whatever. They still thinking like a small business, thinking like they only look at their income statement on a cash basis. You gotta look it into, you gotta start looking into accrual basis. Why do you have to start looking at accrual basis? One, because it's what big boys do. Two, you're relying more on how much you work, how much work your business is delivering, and how much work how your business is performing, as opposed to when cash is hitting in the bank. The cash hitting in your bank is sometimes, a lot of times, not in your control. What is in your control, what you can affect, is how much work and services your business, your team, you yourself is doing at a given period of time, for last month, last quarter, last year. But when and how your clients and customers paid, that's sometimes not up to you. I like to think that most of your clients, all your clients, knock on wood, is paying you when they should be paying you, but there are bad apples out there. There are bad agents out there, and sometimes they, if it's net 30, they go past that. They pay that around the 40th, 50th, even the 60th day. So that's one thing that I sometimes have to pull teeth with my small business clients is like, Mr. Client, Miss Client, you have to stop looking and thinking about your business in terms of cash basis. You have to look at it on an accrual basis because that's what you directly control. That's how you, in a sense, are already thinking, and you have to stop thinking about when the money is coming in because that is a different report. You know what that report is? The cash flow statement. Yeah, yeah, I'm going into that one. The cash flow statement is very important to look at. So now you're looking at two different things. You're looking at an income statement on accrual basis, and then you're looking at a cash flow statement because that includes everything going. Because let's say you have a line of equity, you have a line of credit, you have uh, notes, mortgage, whatever you're paying for, and there's money going out the door. But sometimes that money that's going out the door, especially if it's for liabilities, sometimes that's not being shown in, or usually it's not shown in the income statement. So that's why you need two of those reports, both the income statement on accrual basis and a cash flow report. And you have to see how they're both indicators of business performance and business health and business narrative. It's a story, baby. Yeah, it's a lot to learn. It's a lot to handle. But if you're going to be a big boy, you're going to be a big girl, you're going to be more mature and more legitimate and more just, not just minoring the minors, but also majoring the majors, then you gotta learn these things. You gotta learn the difference between cash and accrual basis.